Hi, welcome to the Smart Money Program. My name is Frank Corbin, your host, and we have some very good information to provide for you today. I'm sitting with one of the managing partner from SHC Investor.ca, Don Foley. Don, so how's it going?
Great, Frank. Good to be here.
Nice to see you. So SHC Investor.ca, what are you guys all about?
Well, essentially, we're a full-service real estate firm specializing in rent-to-own properties.
So let's break it down for the average consumer there. How does a rent-to-own properties or rent-to-own strategy actually work?
Well, it's a little bit different than a typical rental, Frank. With our structure, we're looking to do two things. First is to maximize returns. Second, minimize risk. And we found that by doing rent-to-owns, takes away risk for the investor more so than the rental does. So essentially with our structure, what we do is we have a tenant who moves into a property and then purchases the property at some point in the next 3 years from the investor. Obviously for a profit for the investor, and it's a win-win situation for everybody.
So, so the investor buy the property and then rent it out to the tenant over an next 1 year to 2 year time frame. The tenant then transfer the property into his or her name and fully own it that way.
And that's exactly it. It stays in the investor's name until the tenant decides to purchase it.
Now, this strategy, is this something that you guys create from scratch or something that's been around in existence?
Well, there's a lot of rent-own companies out there, and there's a lot of different models. So what we kind of did was went through all of them that were out there and picked the best points from each, put our little twist on in some places, and we've worked out the bugs, and over the last few years we've got a pretty good product.
Okay, and so what makes you guys different from the average rent-to-own companies out there and providing the same service or something similar?
Well, one of the big things is instead of just advising somebody on what house to buy and then walking away and saying good luck with your rent-to-own, hope you find a good tenant, we do everything from end to end. So we're doing the screening of the tenants, extensive screening of the tenants to make sure they're going to be a good fit for the property. Second thing is we help the investor find the property, and then we have the tenant move in on the day of closing. So there's no vacancy period with our model. The tenant moves in right away.
So Don, to expand your business or expand your program, I understand that you actually aggressively are seeking some investors to partner up with you to create a win-win situation where you actually get to expand your investment returns and build a business at the same time.
That's right. We've been growing at a very good rate over the past 18 months, and we've got a lot of good opportunities that are out there right now with tenants waiting to get into homes, paying premium rent, fantastic returns for the investors, so we're actively seeking new investors to come on board with us.
So as an investor, I'm looking at the program right now, and I want to get on board and start off with your company. What do I have to come out of pocket?
You're going to be looking at around $17,000 to $20,000 in and around that. That would get you into a house, get everything taken care of closing cost-wise, and obviously if you've got more to put down, we can get you more houses, or you're welcome to pay cash for the house if that's the case, Frank. But minimum we'd be looking at $17,000 to $20,000.
So $17,000 to $20,000 is getting me owning an investment property. Your company would assist me in finding the rent-to-own tenant.
That's right. We have the tenant lined up for you already. So we've got the house picked out, we've got the tenant ready to go. It's just a matter of signing some papers to take possession of the house for the investor, and that's when the whole program starts. The tenant moves in, the cash flow starts. We actually collect their deposit before they ever get the keys.
Wow, very good. And over this time frame, what was the length of time this whole process work?
From beginning to end, when we get started with the investor until they've got a tenant in there, can be as short as 6 weeks to 8 weeks. Or depending on how long it takes them to find something they're comfortable with.
Okay. And as an investor, what's my rate of return? Because investors always ask, what's my rate of return? I'm investing my money, I'm coming $20,000 out of pocket, what's my rate of return?
Well, we look for something at a minimum of 20 to 25%.
Wow.
And depending on how much the tenant's willing to pay each month and how much to put down, they could be as high as 40%.
Wow, 40%.
Correct. I know it's hard to believe, Frank, but when you see our model, you can understand how those returns are possible.
At 40%, I'm thinking, wow, that's a huge return. I don't see any banks giving that kind of return. Most stocks and investment, I get that kind of return. And my next question is, Don, what's my risk as an investor?
Well, like I said at the beginning, Frank, that's one of our goals, is to minimize the risk. Maximize the rewards, but keep the risk to a minimum. So probably your biggest risk is that when you sell the house to the tenant 3 years down the road, we project the buyout price up front. So let's say we agree on a buyout price of $360,000 for the property, and 3 years down the road, property values are at $375,000. Instead of making, $375,000 on the house, you make $360,000. So your rate might be cut down from, say, a $60,000 profit on a buyout to a $45,000.
So what you're telling me is my risk is not making as much as I should.
That's essentially it, yeah.
So let's reverse the situation. If the property does decrease in value over that time frame, what's my risk there?
Well, there's no risk for the investor at that point because you've agreed up front to a buyout price with the tenant. So the tenant can either walk away at that point, in which they would forfeit their deposit as well as the credits they've accumulated on the property, but there's no obligation to sell at a reduced price for the investor.
What do you mean by credits?
Well, each month, in order to justify the higher monthly rentals, what we do is we have an incentive program whereby when the tenant pays their rent on time at the beginning of each month, they're paying a premium. So if the average house, let's say, if it rents on the market for $1,600, we'd be looking at anywhere from $1,800, $1,900 and up from there for the tenant.
Okay, so again, I'm making some extra money on the rent premium. So I'm looking at some of the benefits you guys line up here. I'm making some money on the premium of the rent. Also, there's a premium on the property. Okay, you streamline here. You find the property, you find the tenant, and you also mentioned the tenant manages the property. How does that work?
Well, with the rent-own, that's where it's different from a rental. With rentals, you'll get phone calls. Frank, my tap is leaking. Can you come over and fix it? Frank, there's noise with the stove. I need you to come over. With the rent-to-own, we have it written right into the contract where the tenant is responsible for the first $300 of repairs each month. Think of it as a deductible on your car insurance.
Right.
Any stone flies up, chips your windshield, your deductible, you pay it. If you get T-boned, then the insurance company pays a little bit more than that. But essentially, every month the tenant will pay for the first $300 of repairs that are needed for the property. They look after the maintenance of the lawn, shoveling snow, everything to do with the property. It's a very hands-off investment for the investor.
Sounds really good to me, Don. So there's a lot of benefits here, folks. If you're watching the program right now, you want to get hold of Don towards investing. Again, they mentioned $17,000 to $20,000 minimum to get started investing. Anything from 25 to 40% rate of return on your money. So Don, just tell the folks how they can get hold of you.
Well, then everybody can check out our website, shcinvestor.ca, and it's got a lot of information on there, as well as our contact information. Once we hear from an investor, we'll get in touch with them, check out their financing. We do have a full service, like I mentioned. So we're there right from the mortgage approval, the inspection, the purchase, and setting up the tenant with the investor.
Also, I'm looking at the notes we have here. It says all your contracts are reviewed by Ontario real estate lawyers, and also your company is 100% Canadian. Why is that important?
Well, there's different real estate laws, very different between the U.S. and Canada. And there's different laws and regulations throughout Canada in each of the provinces. So our contracts were set up by an Ontario lawyer. They've been reviewed by our professional lawyer. And it's very important to have an option to purchase contract as well as the lease agreement. We've looked at the ramifications with the Ontario Rental Tribunal, made sure there's no conflicts in there so that everything is above board. Like I said, protecting the investor 100%. That's our goal here, minimizing the risk.
Excellent. Your program definitely sounds good, Don. My next question is, how many successful transactions you guys have completed so far?
I believe at this point we're at 38 in total over the past 2 years that we've done, and like I said, it's growing at a phenomenal rate. So we're moving up in leaps and bounds.
Excellent. And is these properties everywhere? Can I buy properties down in Florida doing the same thing? Can I buy it down in Alberta? Where is these properties located?
We look for properties that are within the GTA, ideally, just because that's where the population growth is.
Right.
That's where the people are looking for properties. There's not too many people looking in Northern Ontario for a hot rental market, so we try and keep it where the demand is, and that's in the GTA.
Well, I was talking to different people as we're doing research today for the interview. Some folks are saying property prices are too overpriced in the GTA. You can't find good deals. How does that affect your program?
Well, Frank, as a real estate agent, I heard that same argument 5 years ago. Properties are too much, they're way overvalued. Let me tell you, if I could go back 5 years and buy a property, I'd be making some good money off of that. But the way that we have it structured, where the tenant purchases the property down the road in 2 to 3 years' time at a set amount, we're locking in profits up front for the investor.
Mm-hmm. This is kind of a different question. If the real estate market is hot in the GTA, property prices are going up, people are buying real estate, why would a person wants to get involved in a rent-to-own program?
Well, very good question.
From a tenant perspective.
Yeah, from the tenant's perspective, that's, I mean, a lot of times people struggle to see why would somebody want to pay a premium on it. Why would they want to put down a $10,000 deposit for the investor, just go buy it themselves?
Right.
Well, you've got to remember here, the banks are a little bit more stringent now with their lending for people. So somebody who is self-employed, let's say, can't verify their income, somebody who's gone through a divorce, had their credit a little bit bruised up, somebody who has fallen on hard times, stumbled a little bit, got some issues with the credit, trying to build themselves back up. And these are people who recognize the value in home ownership and don't want to waste their money on rent. They want to have something to show for it, get their place established, get back on their feet in home ownership. And this is what we find with a lot of tenants. They're previous homeowners in many cases, very good incomes, but just not able to get financing from the bank for, usually it's a credit issue that is stemmed from an issue that I have mentioned.
Yeah, excellent, Don. It's just definitely a win-win situation, folks. As an investor in a rent-to-own program, you're actually helping an average person who have bad credit or poor credit who wouldn't be able to qualify for a traditional mortgage. In a rent-to-own program, they can actually start paying the rent, potentially own the home 2-3 years from now, and as an investor, you got to make a little bit of money on that. And you definitely help in the average Canadian get involved or get in the first home or investment property within a short time frame. Wonderful program, Don. I like it. I think people should definitely get involved. Again, tell them how they should contact you to get hold of your program.
SHCinvestor.ca is the website they want to go to. It outlines our program and gives you the contact information you need to get in touch with us.
And I also know you guys have seminars and stuff that you keep.
Yeah, we do bi-weekly seminars. Our next one is coming up on May the 10th in Toronto. There'll be more details on our website for that, as well as through various advertisements in the media.
Okay, excellent. Again, if you want to get a hold of Don and his managing partners from SHCinvestor.ca, that's the website to go to. Fill in your contact information and they will get back to you guys. Again, today's program was about investing in real estate using the rent-to-own program. Don, I want to thank you very much for coming out.
Thanks very much, Frank. It's been a pleasure.
Thank you. Again, thanks again for watching. This is Smart Money Program on REMICTV.com. I'm your host, Frank Corbin. See you next time.